Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan Pingale, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. And today we are going to conduct a special video on the topic top 6 rules under GST with effect from 1st January 2026. So let's dive into it. Let me allow to share my screen. So yes, today's presentation focus on 6 critical GST rule changes effective from 1st January 2026, which fundamentally shift GST from a compliance flexible regime to a system-driven change. So non-negotiable compliance framework. So let's start with it. Means these changes impact every registered person irrespective of the size and directly affect what return filing, input tax credit, registration continuity, and historical compliance. So this session aims to explain what not just the law but also practical implications, risks, and action points. So let's start with it. Why these GST changes? So let's understand the GST has completed more than 8 years. The government is now shifting from trust-based compliance to the technological-based or technological-driven enforcement. So earlier returns could be filed late, mismatches could be adjusted later, old returns could remain pending indefinitely. But from 2026 onwards, systems will not allow mistakes, defaults will block compliance automatically, and time limits are final and irreversible. Moving further, let's see what are the top 6 new GST rules. That is the mandatory bank account details, registration suspension for non-compliance, blocked returns due to ITC, then automatic and mandatory late fees, 3-year time bar on old GST returns, and annual turnover reassessment and registration review. So let us now examine each of these 6 rules one by one, understanding what has changed, what will happen if ignored, that is the consequences, and what taxpayers must do immediately. So, rule 1, mandatory bank account details. So, in this, earlier bank account details were often ignored or delayed. So from January 1, 2026, bank account details are no longer optional. They are mandatory to be submitted. So the system requires correct account number, IFC validation through the portal. Without valid without valid bank details, the GST compliance cannot even begin. So that is the mandatory bank account rule. Mandatory bank account details need to be submitted. That is the rule 1. Let's see what are the consequences of non-furnishing of bank details. So this is a silent but a powerful control. There is no notice, no hearing, no manual intervention. The system simply switches off the GST and until compliance is restored. So this will severely impact business relying on e-way bills, continuous invoicing, and vendor compliance. Moving further, let's see rule 2, that is the blocked returns for non-compliance. So under this, from 2026, you cannot file incorrect returns and fix later on. If ITC ledger doesn't support the claim or RCM tax is unpaid, GSTR3B will not open for the filing. So this marks the end of what? Estimated ITC, temporary adjustments, and post-filing corrections. Moving further, Rule 3, strict ledger and strict ledger reconciliation. That is the ledger validation. Means ITC and RCM. So ITC reclaim ledger must have what? Sufficient balance. This change forces what? Real-time reconciliation. Taxpayer must ensure purchase data is correct, reversal are properly accounted, RCM is paid before the before claiming the credit. So GST returns are now what? Ledger driven, not declaration driven. Please note, GST returns now are ledger driven and not declaration driven. Moving further, Rule 4, automatic and mandatory late fees. So late fees are no longer now adjustable. Earlier, returns could be filed with zero late fees and also issues resolved later. But now, unless late fee is paid, the submit button will not activate. Please note that unless late fee is paid, the submit button will not activate. So this enforces what? Strict discipline in due dates. Let's see impact of the late fees on the taxpayers. This rule hits what? Habitual late filers hardest, means those who are filing regularly late. So even nil returns attract what? Late fees. Very, very important to note. Even nil returns file late, it attract late fees. So block future compliance. Regular filing discipline is now financially essential and not optional. Moving further, let's see what is the rule 5 changed. 3-year time bar on old returns. So GST returns cannot be filed after 3 years. This is one of the most dangerous changes. If a return crosses the 3-year limit, it is blocked forever. Even penalty payment cannot reopen it. So there is no appeal or portal remedy currently. Let's see what are the consequences of 3-year time bar. So many taxpayers carry old pending returns thinking we will file them later, we will file them later. But from now onwards, later may never come. This rule closes the door permanently on old defaults. What? This rule closes the door permanently on old defaults. Going further, now we will come to the rule 6, that is annual turnover reassessment. So every financial year, taxpayer must reevaluate whether registration is required or whether composition eligibility continues. So incorrect assumptions can now lead to what? Retrospective tax demand. So manual review of annual aggregate turnover is necessary. Registration threshold to be rechecked. And so wrong status may lead to what? Demand, interest, or penalty. So impact what? Composition and regular taxpayers. So moving further, let's see what are the overall impact. What has changed by this rule 1, 2, 3, 4, 5, 6. So in a summary, GST has evolved into what? A compliance lock ecosystem. If one element fails, registration, ledger, payment, return, the entire system stops working. Very important to know. If one element fails, that is registration, ledger, payment, return, the entire system stops working. So that is what compliance is equal to real time plus accurate. Let's see what are the key action points for taxpayers. So taxpayers and professionals must now move from reactive compliance to preventive compliance. Regular review and discipline is the only solution. So these are the key action points I have noted. That is, update the bank details immediately, clear all pending old returns urgently, reconcile ITC and RCM monthly, track due dates strictly, and review registration and turnover annually. So for taxpayers and professionals must now move from what, as I said, reactive compliance to preventive compliance. So regular review and discipline is the only solution. So let's see what are the takeaways from the today's video. So to conclude, GST from 1st January 2026 is not about punishment, but about the discipline and data accuracy. So those who comply on time, reconcile regularly, maintain clean records will find GST smooth and predictable. So those who delay may face irreversible consequences. So that's it for today. Please note down my contact numbers. If you have any questions, observations, suggestions, query, please do let me know. Thank you. Thank you so much for patient hearing. If you like this video, then please click on like. If you are not yet subscribed Tax YouTube channel, then do subscribe for latest updates and video series like this. Thank you. Thank you so much. Bye bye. Take care. See you soon. Hare Krishna.